Welcome back to Stately Investing, everybody. In today's episode, we talk about breaking the $25,000 mark. It's a big moment for us. We talk about how I did it. Am I scared of market corrections? We also talk about the monthly dividend recap, whether or not I should be totaling up all my dividends on video and showing you guys some of my other accounts. And finally, we'll look at the growth chart to understand how dividend growth is working for me. So stay tuned, everybody. If you are interested in a channel that's going to help you achieve your financial independence, feel free to subscribe below and let's get started. All right, let's talk 25K, everybody. We are sitting at $25,717. You can see overall, this is the overall view. You can see I have a gain of almost $300, which is a return of $2.09 or 2%, almost 3%. You can see most of that is actually from earned dividends. So market gain, I'm actually down almost $40, but earned dividends is up $333. So this just goes to speak to the strength of a dividend growth strategy. So even when your overall portfolio is down, if you are making smart investments in companies that pay out dividends and grow their dividends, you can be positive even when the market is slightly negative. M1 is a great platform. I always talk about M1 and how great it is. I truly believe that you can see all of the information that they give you and kind of the explanations. The visuals are fantastic. But let's jump into some other views for the month. Since this is our monthly recap, you can see overall my gain is negative for the month. So market gains have been down pretty consistently this month, almost negative 500. But again, my dividends are offsetting this a little bit at a positive almost $78. So you can see this big jump and how we actually achieved $25,717. It came this week because I invested a large chunk in the market. So we jumped from about $16,400 to $25,717. And let's jump into the activity so you guys can see what was happening. You see this was yesterday, essentially a deposit of $9,000 and then a buy of $9,000. You can see though, however, there's consistent dividends, and one of my biggest dividends is Philip Morris at $12 and Altria Group at $15. So these companies were once combined, and now that they're separate, they both pay great dividends. Altria was once a part of Philip Morris, but it spun off. And you can see just throughout the month of July, I've already started seeing big dividends. We're going to look back to June in this video. So we're actually going to talk about my June dividends and how it was the best month I've had for dividends so far. And we'll go through the chart a little later. But overall, this deposit of $9,000, is how we achieve that mark. And so you might be saying, well, I don't have $9,000 sitting around. This is really money that I've been saving and some things with work and just accumulating some of my bonuses and being able to invest $9,000. I actually have more sitting around right now, but I just need to make sure I'm covering some other costs that I have going on. We're currently buying a house, and so I want to make sure that I have enough money to cover all of the other expenses I have. But I think in the near future, you might see some other investments coming into the account. So let's quickly look at what we bought with that $9,000. You can see it is a mix basically of my entire portfolio, right? So large amounts in Novo Nordisk, AbbVie, both pharmaceutical companies, quite a bit in Starbucks as well. Prudential. So Prudential, I've been kind of buying up while prices are low, right? I think kind of the coronavirus COVID-19 crisis has been affecting Prudential. So something that I've been buying into. Gilead Sciences. So hopefully you guys have checked out my last video. I'll put a link up above on Gilead and why I think this is a strong dividend grower, and why I I tend to invest in Gilead and why I think they are poised for success in the future. Microsoft as well, AT&T. I've also been buying shares of AT&T separately from my M1 account, and I might do a video on AT&T soon. Coca-Cola, their prices have been fairly down, and that yield has been looking better. So I'm glad M1 is buying into that for me. Again, Philip Morris, same scenario there. So you can just kind of see where M1 is deciding here what I should be investing into based off of my allocations in the pies that I have. So why don't we jump back quickly to the pies. So remember, I do this 60-40 split. This was all based on like the exact allocations I wanted for my original stocks. Right now, it doesn't really mean much for the 60-40, but I leave it the way it is because it's been working out for me. You can see my 40% has been getting slightly better gains of the companies that are sitting in there. But you can see the allocations, right? So there's only a few things that are like overweight, which is Leggett and Platt and ORI. And then I think this is Verizon. Yep, Verizon. So you can see that as things fall or gain, M1 will automatically reinvest, or when you put money into it, will invest in a way that tries to keep your targets at the levels that they should be at. So why don't we talk about whether or not I am scared of a market correction? So putting a large chunk of money in, right? So 9,000 is a little more than half of what I already had in there, right? We were at 16,000 overall, and now we're up to 25,000. So putting in 9,000 at a period in time when we're kind of at a peak right now in the market, am I scared of correction? Sure, right? Like I don't want my money to go down. I don't want my share prices to go down, but I believe so much in the dividend growth strategy that pretty much any time is a good time to invest, right? So you always want to buy things when they're at a lower price. And, that's why I still have some money set aside for those things and why I'm buying some individual stocks in other accounts. And we can talk about my Robinhood account in another video. But I think there's no bad time to invest, because if I'm a long-term investor, right, and we can talk about, I'll put a link up to the video on 3 investing strategies that I use. And then there's also a video I have on trading versus investing. And the main thing in trading versus investing, I'm investing. I'm looking at long-term gains rather than short-term price fluctuations. And so if you're an investor and you're thinking about the financial stability of these companies that you're investing in, and you have a long-term view, then I think, getting money into the market and letting it sit there for a while, it's only going to go up if you have a long enough term view. And so right now I'm fairly young, right? I think it's a smart investment to put things in early and watch it grow over time, even if it dips in the near future. So that's my strategy. So why don't we jump into the actual numbers and see how my dividends were for the month? All right, so let's look at the numbers here for the month. So this is my dividend tracker. You guys can see how I've been doing since we started this passive income journey. I think, we can see where I started at 0 and have kind of worked up my fund size here. So funds are at 16,000 for the end of June. And you can see in the month of June, I had $61.87 in dividends. So the highest month yet, right? And that just shows that if you keep investing in dividend companies and dividend growth companies, you will see the results. You will get those results. So whether or not those prices fluctuate, really the only thing that can lower those payouts are dividend cuts. And I've had very few companies that have cut their dividend in my portfolio, Disney being one of them, and then Dominion Energy recently being another one. And those two I have very kind of low exposures to in my portfolio. So I think overall I've been doing pretty good throughout the COVID crisis as far as dividend companies. You can see the dividend growth for the month was double. Basically it doubled the previous amount, a little over double. And you can see kind of my average dividend income, so the trailing 6 months. And so this is something interesting to track as well, right? So this gives you kind of, are you trending upwards or down? Hopefully you're not trending down. If you're putting money into the market, you shouldn't really ever be trending down. But you can see kind of how much your dividends are averaging over a 6-month rolling average, and it gives you a good view of your realistic growth for your dividends. So average, I'm sitting at around $35, but this particular month I was actually at $61. I also do some math here that shows you how to calculate like your expected dividend. If you look at the formula here, you can see that it basically takes your previous month and then takes the median growth rate of your previous months, and adds that to it, so you can figure out your growth rate for that particular month, and it gives you an expected amount. So I was expected to get around $31. I ended up getting $61, so I was $38 over the expected. This is going to jump up dramatically next month because my growth rate was so high this past month, so it's expecting me to get $72. Although with my large investment this month, I might be able to hit that depending on some of the dividend ex dividend dates and when dividends pay out. So the other thing to look at in my spreadsheet here is the monthly dividend chart. You guys can see here, it's just mapping out exactly those dividend payouts. It tracks it every single month, and then there's a trend line that's linear based, since it's really a function of me putting in money every month. But this shows you that this is the highest month yet. We haven't quite hit a year yet. It'll be interesting to see when we get to the September month and see kind of what month is my highest. It looks like June might be the highest month that I have. However, with inputting a large amount of money, this last quarter here might actually shift that. So hopefully you guys are learning about dividend growth and whether or not it is the right strategy for you. I always encourage you to leave comments here. One question I have for you guys is, should I start adding my other dividends from my other accounts, right? So I have some old 401k accounts that have a significant portion of dividend generating companies in there, and dividend funds, actually a lot of ETFs and my 401ks and my rollover IRAs. So those produce dividends, and it would be interesting to see if I am summing up all of those dividends that I have across these different accounts, if I am hitting higher numbers and seeing what it looks like if I really did want to retire, right? So like if I wanted to retire and $61 a month might not be cutting it, but if I have another set of dividends out there floating out there that's around $61 for the month, let's say, that's almost double. Now we're up to $100 a month, right? And then in the future, as the years grow, it's just growing and growing and growing. Maybe I can start hitting that $1,000 a month mark, right? And if I can hit that $1,000 a month mark, maybe I can hit $2,000 a month, right? So you see how compounding hopefully is working out. Leave a comment below if you think I should add that in for future monthly recaps. Again, hit the subscribe button, hit the like button. Hope you enjoyed the video. Stay safe out there, and I will see you again next week.